Assalamualaikum to our lecturer, Professor Maida Dr. Nur Faradila. I am Nurul Hidayah. Together with Akilah, Maza and Wardina, today we will present our analysis of the Big Pharmacy and Caring Pharmacy acquisition. Big Pharmacy and Caring Pharmacy are two leading retail pharmacy chains in Malaysia. Their complementary strengths make this acquisition a strategic business decision. The acquisition process began in 2023 when 7-Eleven invited acquisition proposal, accepted in July 2023, signing of the sale and purchase agreement in September 2023. The transaction was successfully completed in January 2024. Overall, the transaction is classified as a horizontal acquisition, a friendly acquisition, and a share purchase based on industry transaction approach and acquisition structure.
Good day everyone, I'm Akilah Maisara. This is the pre-merger financial data of Big Pharmacy Holdings for 2023 will serve as a baseline for comparing the company's performance before and after the merger. For methodology, we extracted financial data directly from the Big Caring Group perspective 2026. The analysis is limited to Big Pharmacy's standalone financial statements before the acquisition. Before the merger, Big Pharmacy recorded 1.1 billion in revenue, 41.2 million in profit after tax, 727.6 million in total assets, and borrowings of around 90 million. After the merger, Big Caring Group recorded strong growth. Revenue increased from 2.17 billion in 2024 to 3.41 billion in 2025, while profit after tax rose to 143 million. Profitability improved with gross profit margin increasing to 24.8% and EBITDA margin to 11.2%. Although ROA declined after the merger due to a larger asset base, it recovered in 2025. Over to you, Mazia.
Assalamualaikum, my name is Mazia and I will be presenting the financial performance following the Caring acquisition. The acquisition was primarily financed through borrowings, resulting in higher leverage. Although interest coverage declined initially due to higher finance costs, it recovered by financial year 2025 as operating profit improved while liquidity remained stable throughout. In addition, the enlarged group delivered strong revenue, EBITDA and profit growth. Positive same-store sales growth also confirmed that performance was driven by both the acquisition and continued organic expansion. Moving on to the strategic rationale, the improved financial performance confirms that the acquisition successfully achieved its 5 strategic objectives: market leadership, brand diversification, supply chain synergies, vertical integration, and IPO readiness. Overall, the acquisition created sustainable growth and long-term shareholder value. With that, I hand over to the next presenter. Thank you.
Hi, my name is Wardina and I'll conclude our presentation with the financial impact. This acquisition was a textbook win-win. The seller, 7-Eleven, booked a RM 262.8 million gain, driving a 291% PATAMI surge. They dropped their debt to equity below 0.30 times and reinvested into their 7-cafe expansion. The acquirer, Big Caring Group, saw revenue jump 247%, synergies drove a 400 basis point margin expansion, and basic EPS nearly tripled to 74.8 cents. For our final verdict, BCG captured a 23.6% market share while they took on RM 1.33 billion in debt. Their upcoming IPO will transition this into permanent equity. To conclude our group's analysis, this transition generated positive net present value and was highly value accretive for both parties. On behalf of my team, thank you for watching.